Finally, the day is here where we had the Fed meeting and we had Jerome Powell talking, and guess what he said? Yes, we are tapering. So, what did he say and how does it affect us? Well, let's get into it. First of all, he said we are going to go from 120 billion a month to only 105 billion per month. And we are going to start in November, this month, mid-November. We're going to reduce our spending at 120 billion. So we're going to reduce 15 billion total, 10 on treasuries and 5 on mortgage-backed security. What else did he say? We're going to do the same thing in December and every month until the whole asset purchase program is ended, mid-2022. Well, that was according to the plan. Now, the other thing he also mentioned was that if there is any deviation in the inflation or the unemployment, that might change the pace of the tapering. But neither way, we have now started tapering. The other thing he also said that, well, the first question they asked, what are we going to do about interest rates? Are they going to rise now? Well, he says that is actually opposite, because right now we are supporting the economy and we can't increase interest rate at the same time where you're trying to support the economy and then you're trying to brake. It's like speeding and braking at the same time. So we have to wait. First taper, then rate hikes. But we then need to see unemployment falling and inflation still being as high as it is. Another very bullish for the market that Powell said when he was asked, but why are you tapering at double the rate as last time you were tapering? And the answer is, well, the demand is very strong. Jobs opportunities are plenty, and we are years above the level in 2013. And that's when the stock market rised, and that is why it's going to continue rising. He also said that they're expecting the maximum employment to be fulfilled in mid-2022. That means also higher stock market, at least so far. Remember, the Fed has also said that the inflation that is currently high and has met their target is going to reduce until the second quarter. And in the second quarter, that's also when the tapering ends. So that is a perfect match as to, are we too high, are we too low, or are we going to raise interest rates? So we have to wait. First taper, then rate hikes. But we then need to see unemployment falling and inflation still being as high as it is. Another very bullish for the market that Powell said when he was asked, but why are you tapering at double the rate as last time you were tapering? And the answer is, well, the demand is very strong. Jobs opportunities are plenty, and we are years above the level in 2013. And that's when the stock market rised, and that is why it's going to continue rising. He also said that they're expecting the maximum employment to be fulfilled in mid-2022. That means also higher stock market, at least so far. So Powell starts his speech by saying we kept our interest rates near zero and we will start reducing our asset purchase program, tapering. He then starts talking about the economic activity that rose by 6.5% in the first half of the year. GDP notably slowed down because of bottlenecks and supply chain issues, but also the spending slowed down. The economic growth should pick up this quarter and remain very strong this year. Labor market has continued to improve. Demand for workers are very strong. So this is the two major, most important things we need to look into when you're looking into economic data points to look forward to. With overall economic activity, the pace slowed down with the rise of COVID cases. So going over to labor market, which was at 4.8% in September And he says that this figure understates that the participation in the labor market is subdued. Some of it could be because of an aging population. The other one is that the prime age individuals also was not involved in the labor market. Maybe because they created their own jobs. Then the employers will then have problems filling vacant positions. But this will then diminish because of, if you constraints to COVID, people will then apparently get back to work. So in the downturn in the economy has really not been falling equally. It has mostly, for joblessness, been affecting the African American community and the Hispanic community. The bottlenecks and the supply issues are limiting businesses because all of a sudden demand are picking up and they don't have people to fill that demand. So that is also hurting businesses at the moment. And inflation is at the moment running well above the target, and it has been met. The main driver of inflation is the dislocation caused by the pandemic, the effects on supply and demand from the shutdown, but also the even reopening and the ongoing effects of the pandemic. Our tools but the problem here is the tools of the Fed doesn't solve the supply chain issues. But the problem is the supply chain issues is not resolved by the Fed. But when they are solved, inflation will then fall down to normal levels. And if inflation expectations becomes too high, they then are going to act and they are going to create price stability again. Go figure. As we're going into the press release here, of course, their goal is maximum employment and price stability. And then they go on to say that with progress with the vaccination and strong policy support, indicators of economic activity and employment have continued to strengthen. Bullish there. The sectors most adversely affected by the pandemic has improved, but the summer's rising COVID cases slowed their economy. So bullish, bearish. Inflation is elevated, largely reflecting the factors that are expected to be transitionary. Supply and demand imbalances related to the pandemic and the reopening of the economy have contributed to sizable price increases in some sectors. So those who has been very well off by this pandemic are still the ones that is feeling the most. Overall financial conditions remaining accommodative, in part reflecting the policy to measure to support of the economy and to the flow of credit to the US and household and businesses. So we are going from 80 billion in treasury securities to 70 billion per month, and from 40 billion a month on mortgage-backed securities to 35 billion per month. Beginning in December, the community will increase its holding in the treasury securities by at least 60 billion per month, and by mortgage-backed security by at least 30 billion per month. The committee judges that the similar reductions in the pace of the net purchase will likely be appropriate for each month. Now, where does this go into our analysis of the market? Let's head over to it. So the reaction of the bond market today is actually to send the yield higher. And if you go to S&P 500, we have seen a very sharp reaction of the market, and that was because that max employment is going to be met by June or mid 2022, but also where he says we are way above the past level of 2013 when we were tapering last time. We have a very strong labor market, so that is going to be dollar bearish, but not really that much. But it was mostly for the stock market and Nasdaq. So what are you going to look for now? You're still going to look for buys. You're still going to look for pullbacks and a continuation higher. How high are we going to go? Well, let's see. The other one that is also going to be lifted by this news in the end is gold. Gold has its own issues at the moment. It's very high, but this is going to drive oil prices higher. And when we are now expecting that the American economy is doing so well, we might also expect gold to continue to fall, generally speaking, throughout the next year. And then when we come into like euro dollar, we are actually now seeing a potential to go to the higher side, mostly because of a weaker dollar and also the ghost of inflation, also the ghost of increasing interest rates has been pushed out until sometime into the future. So maybe the most interesting pair to look forward to is the dollar CAD, where CAD is strong and the dollar is weak. And we might be seeing 122 by the end of it. And as you can see, Tesla was reacting positively to this news, and as well as Facebook coming in here as well. A positive news coming out for the market. So I guess the market's still gonna rise. So I hope you guys have been briefed well enough on this today. So I will see you in the next live session.